Hello, welcome to another live stream with me, Christian Rauchmal. Better said, welcome to episode number 15 of Daily Market Mastery, where we use Elliott Wave Theory or the Elliott Wave Principle to try to predict certain stock movements or future movements. Now, as always, let's get the disclaimer out of the way. Everything that I share in this live stream / video, if you're watching it later, is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Now, with that, as you know, if you are new to Elliott Wave Theory, check out episode 1 of Daily Market Mastery. And if you're already familiar with it, then that's great. What else is there to say about Elliott Wave Theory real quick, other than checking out episode 1? You can use the links in the description down below to basically read the book for free online or order a physical copy that will explain Elliott Wave Theory to you. And you will also have to push the button. Find our one-page cheat sheet down in the video description down below that makes it easier to identify patterns and how they should subdivide into patterns of lower degree. That said, yesterday's episode was all about wrong software, was all about reviewing what we did in the past, and we actually decided to close our Domo positions, and we closed them at, I'm going to check the history, we closed them at 16.42 while expecting a correction down to potentially the 13.6 range. Looking at this here, so we said, okay, we will expect, part of this happened yesterday then, that can go back, but we said we expect, okay, that we will have a wave A, and if that now is wave B in progress, we could actually potentially, I have to hide the message. Yeah, if you want to check out my portfolio, there is a pinned message in the chat that you can use to check out my personal performance. And if you want to do so, copy my portfolio so you don't have to deal with any of that. Now, there's a chapter in the Elliott Wave Theory book that is, ratio analysis, yeah? And I'm not sure if that also covers, where do we have it? If that also covers corrective patterns. So like, for example, zigzags. Ratio analysis, there we have triangles, there we have impulse waves, there we have interesting, yeah, so, but that does not subdivide wave B. So usually, or not usually, but the retracements in the book, and if you were wondering, so that's why it's good to have the physical book, but also okay if you have the cheat sheet. In the book, in the chapter ratio analysis on page 133, we can see two graphics. One would be a flat corrective pattern where wave B builds a new all-time high, and basically then the entire wave before would subdivide like this in as a Fibonacci retracement. And just in case you're wondering, if you're reading the book online, you can just look into chapter 4, ratio analysis, and then you have to find which of the sections contains that graphic. And a zigzag, which is what we might be looking at here, subdivides like this, which would mean that basically wave C would end in the 61.8. So switching back to the screen, in the 61.8 range here. However, it doesn't give any information about wave B. Now, if we go to the rules and guidelines, there we might be able to find something about zigzags and how much they very often retrace. No. Wave A. If wave B is a running triangle, we don't know that. It will typically retrace between 10 and 40%. 50 to 79, 38 to 50%. So in the three options that are here, if wave B is a zigzag, we would have 80% retracement. Now we're gonna move my kitty bookmark, and then we're gonna zoom in here real quick before we jump to look at something new that can actually be extended. So that is saying if we pack or take a Fibonacci retracement, by the way, if you're wondering which tools I'm using, you can also find them down in the description below. So here we go. Then it would say, okay, wave B would, what did we say? I'm going to look it up again. Wave B, if it turns out to be a running triangle, would be between 10 and 40%. If it's a zigzag, it would be 50 to 79%. Now, if we look at the one-page cheat sheet, again, switching to the dash cam, then we can see a zigzag. Wave B is in 30% of cases a zigzag, and in 40% of cases a flat, which, yeah, like obviously behaves different, but where we don't have actually a line connecting the ends of wave A and C is often parallel to connecting the end of wave B and the start of wave A. What? B and A and C. Okay, so once we have wave B, we could potentially use that to try to determine even better where wave C might end. But if we assume that we look at a zigzag here, so 50 to 79% retracement, we are right now, we can see that we already have, yeah, like that's the bigger one. So let's make that one, yeah, like let's make that one smaller. So we're looking at this one here. So we are already in the 50% range. So it's possible that our wave B already ends here, yeah, and then yeah. So what the other sorry, switching back to the desk camera. So not desk, but desktop camera. So yeah, it's possible that basically we already have our wave B finishing here, in which case, I know it now looks a little bit flat because I'm zoomed in that far, but in which case then very often, not always, basically if we put a line on this here and move it and put it here, then that would be where we are thinking that it might go. And if we now check, it is the 13.6 range, and which also aligns very closely with the end of wave 4, because not always, but there is a case where the corrective wave here will retrace in the area of wave 4 of the previous impulse wave, which is this entire wave of a lower degree, which is then when we basically label it out. So we have basically 3 indications right now that would point, that there's no guarantee of course, but that would point towards it will go down to $13.60, and that would then mark the end of this corrective wave, which is where we would buy again. That is also the reason why we currently have a price alert on Domo. I'm just going to check what the alert is real quick. So if we have it obviously a little bit higher as far as I recall it from yesterday. So we have it at 13.75. So that's what we're waiting for. I'm curious to see how much more it will recover, and if we're right, it could also be that it goes up from here. Then we would have to wonder how that here can be a corrective pattern completely. But I expect, okay, today it might have a positive day. Again, seeing more upside here today and maybe even tomorrow before we then see the corrective pattern finish. Yeah, and ideally hit the $13.60 range before it then goes back up again. So we would probably, when we hit it, or if we hit that area here, we would then buy in again, and then basically would expect the third wave movement, which would then, if we take a trend channel, I know there's a lot of lines on the chart already, blah blah blah. If that would be our wave C down here at, sorry guys, hope you're not deaf. Which then would indicate, okay, that we wait for a breakout from this channel here, which is already $20 range. So where we're looking at a potential, again, first we have to wait for this to play out and ideally go into the 30-60 range. And we have 3 different indicators that tell us that's where it's likely to go. Again, no guarantees. As said, everything I'm sharing here is my personal opinion based on my understanding of Elliott Wave Theory, no guarantees. But if we see it play out like this, I will re-enter in that area again, and we'll have a profit target that's then further up the, yeah, like above $20, potentially in the $30 range even. So like in that direction, not exactly $30, but somewhere here between 25 and 30. And yeah, that would be nice because we then basically, we already managed to not suffer that huge drop. So again, we sold at 16, what was it? Portfolio history. We closed our position at 1642, which, if we check here, yeah, it was April 24th. No, we had April 25. When did we close it? It's already more than 2 days ago. We closed it. Oh, we actually closed it wrong position. There, we closed it on the 24th. Yeah, so we actually closed it here. Yeah, like a little bit below the opening price. So yeah, could have gotten it better, but overall quite happy with the result. So our positions were, we had 2, one we closed with 14.5% profit and the other one with 15.6% profit that we opened on the 12th of April. So 12th of April. So we basically enjoyed the journey from here till here. So that's 12th of April. No, that's 13th. That here is 12th of April, 7 p.m. and we got in at 15. So basically, we actually timed it really. I'm not saying that we knew perfectly that that will happen, yeah, but that's where we entered. So we didn't make that micro analysis here. We just looked at, okay, overall it looks like 1, 2, and from here we will go up. And now only after we saw that high point here, that's why we daily go through the positions that we have. We noticed, okay, it looks like that's on a smaller degree, a pattern that's finished. So we're going to close out here. So really quite a perfect trade, to be honest. I mean, close to perfect. And if it plays out like this, we're going to have an even greater opportunity then, which will take a little longer. So it will not just happen in 12 days that suddenly we have like 15% profit. But from here, we then have to play out another 1, 2, 3, 4, 5 before we get into that range, which would then potentially take like 2 or 3 months, plus minus a little bit, to get us into that range here. But again, right now, everything hangs on or consists of seeing if we are right or if I'm right here, that this will play out as A, B, C. That's the crucial point. Also possible that we move up from here and that we actually missed out then on future profits because we didn't want to wait out this. Now, yeah, like today's episode, I actually planned that we look at a new stock. Not sure if we'll manage. We have 20 minutes left in today's episode. But I feel like focusing or sharing this part here and how it might play out actually is more useful than analyzing something from scratch. Now we're quickly going to check what's going on in the rest of our investments, starting with the Standard & Poor's 500, where I said we assume that this is our wave 2. Right now that would still be valid because there we did not. So here up, if we moved it up, and actually I don't understand why that's not so up. There we go. So here we have a high point of 4,169.48, and here we have a high point of 4,195, so that's higher, so that's still valid. And that potentially, if we look at it, 1, 2, 3, 4, 5 would check out, and then that would need to check out as ABC, which makes this then 1, 2, where we right now would then expect to go further down and have our drop continue so that there's another wave 3 in development. And if that is the case, so then it would be, we would have, again, using Kennedy channeling technique, a base channel that we draw here and would wait or would have our wave 3 downwards confirmed once we have a breakout down here. So below the 3,700 mark. That's obviously like an almost 10% drop in the SPX. So it's not happening in one day. Yesterday, we had a drop in the right direction. You will see either it happens like this or we'll see a small new all-time high, as mentioned, in up to the 4,260 range or the 4,325 range. In that area, I'm not going to be worried. Even if we go a little bit above that, I know our portfolio would suffer a temporary loss, but I would not be worried about that because it would just mean that the corrective pattern went a little bit further. Funny enough, this here is also one of the cases where we would have, in this case, we would be a leading diagonal, and then we would have a retracement here. So wave 2 would retrace roughly into the area of wave 4. So if it stays like this, we are roughly in that area, yeah. If it goes a little bit further, we would still be in that area. And if it turns out to be right, it again would prove that rule, guideline, however you want to call it, a quite reliable or relatively reliable instrument. Now we can keep that actually on the chart for now. And moving on to the NDX, where we have a similar situation with the difference we did not determine our wave 2 here yet. Yeah, so we did not say, okay, this is wave 2 because we have a new high here. So it could be that it's like A, B, C. It could be, I don't know, A, B, C. It could be W, how is it then? W, X, Y. Yeah, it could be, what would be the other one? W, X, Y, double X, Z. So it could also be basically a triple free corrective pattern. Although triple frees in the second wave position are a 1%, no, that's triple zigzag, 10% chance. So there's a 10% likelihood that this can be a triple free. But we're not going to try to confirm that now. We're waiting, and we're same situation as long as we don't go below 13 or above 13,720 or not too much above it. So we see 30,900. So the 14,000 mark would be like the point where I would start to worry if I maybe got it wrong. But overall, yeah, like we're good there. Shopify, what has Shopify been doing? As I said, here we have it labeled on a relatively long-term outlook. You can see we're talking about years here. 1, 2, and we think we're currently in wave 3. And so far, if we zoom in, so here we are, 1-day chart, 2-day chart. Okay, there we're also still 2-day. If we look in, when did we open our Shopify position? one on the 16th of February, which was yeah, like too early, a little bit unlucky. So on the way down here, so here somewhere 16th, so in between here, yeah, they're February 16th, yeah. So one we opened here, and obviously now it's again in profit, and the other one we opened on the 30th of March when we doubled, which is also in that area here, so it should be this candle, 31st, 30th, so here. So yeah, like our position has been at a loss, but looking at it, we've doubled down. Yeah, we cannot label this. I mean, if it were 1, 2, 3, 4, 5 would need to be a leading diagonal, and that would be 1, 2, then that would be 1, 2, 3, and 1, 2, 3, 4, or 3, 4, 5. Then that would be a corrective pattern, which means 1, 2, 3, 4, and then we would currently wait for wave 5. So, and if that's the case, our destination channel for that macro or smaller scale labeling would be this one here, where we would expect to at least hit the median, which would give us already a profit since we entered below the $50 mark, actually around 45.86 and 46.99, whereas that would also be a profit target, and it could go further. And again, we are looking on an even bigger scale, so yeah, confidence still there. I'll just have to wait it out. Now, I want to point out here for transparency reason, because I'm showing off like, okay, this is working out, this is working out. We also have losing trades. So we, for example, had a position in Peloton that hit the stop loss, and that position actually lost 20%. Now, that's not 20% of the portfolio, but that's 20% of the 1% that we risked in that position, yeah? So overall, it basically lost at like 0.2 something percent of the portfolio value, because I got that one wrong. But yeah, looking further, Black Knight Inc. is doing what? Currently going down. Okay, there we may turn out to be wrong. I mean, I can probably label this as 1, 2, 3, 4, 5, but then 1, 2 already, yeah, that still would be valid because we don't have a new low here. So, but then it might be challenging to get this labeled as 1, 2. So it might be, yeah, like, yeah. So we'll have to see. Either we hit our stop loss, which is at 52. So we still have a little bit of leeway before we hit that. Considering that our profit target is way above 120, our risk reward ratio is just too good. And if it turns out that here I got it wrong, well, then so be it. Fort. Yeah, there we actually expect, so we'll actually see how right or wrong we are really, really soon. It would be okay if we get a little bit lower here and so on, so if we move a little bit sideways or so, but basically if this turns out to be correct, then we would go up from here. And then again, looking at the long-term labeling that we have here, we would actually expect to hit like a really, really nice profit. So we're talking about like a couple 100% over the next couple of years. But we'll see how it turns out. Could also be that I'm wrong here. Can also be that the extension, that the corrective pattern develops further. So we'll really see how that works out. GameStop, yeah, we'll skip that. So like just consult the GameStop stream that we made where we covered that. So, and Domo we just did. And with that, we already have 20 minutes of the stream done without actually looking at anything new. Which is a little bit of a pity, but we'll try to get something in. So because yesterday we didn't. Tomorrow, unfortunately, there will be no stream, because we will, or I'm not at home. Irina has her practical driving exam, so you can all cross fingers for her to pass. And yeah, what we're gonna do, we're gonna open up the economic calendar on eToro, and there we're gonna jump a month ahead, so to see what's coming up. And there, I think we're gonna look at Square this time. So let's open up a new chart and search for Square on there we have it, and there we go. And yeah, we want to have a monthly chart for the beginning. Now, since I'm using Interactive Broker as a data source, we always first go to TradingView and make sure that we open up the same thing there. And on the monthly chart, and to check the history. So they have history since 2015. I have history since a little bit later. Yeah, so that's, oh no, it's November 2015. So that seems about right. Now we have a logarithmic chart here, and if we check back here and zoom in a little bit, so just to get an idea, we have 1, 2, 3, 4. Okay, it cannot be because wave 4 retraces unless that would turn into a big leading diagonal. Not sure if on that scale that's even possible. But yeah, we might have to make 2 counts for that. So 1, 2. But yeah, so we have this, and overall it's like a steady up. So sometimes we have stock splits not accounted in our data source, which is then very, very frustrating. So, and yeah, let's assume that's correct. And let's try the auto labeling. What it does here, it says 1, 2. Okay, and then we would say, if that's 1, 2, then please tell me what's in between here. And then it says, okay, that would be like that. I'm not sure that checks out because in terms of timing and so on, it doesn't even look remotely proper. But if we say that would be like this, then it probably would say it's wrong because it would need to be a leading diagonal. Oh no, it would not be. Let's double check here. So yeah, we have this here, up, down, that checks out, and then here, and they are logarithmic. There we go. 1, 2, 3, 4, 5. That looks really nice here. So if we use Kennedy channeling technique real quick here, and we draw our base channel, so this would be our 1, 2. So we have like wave 1, wave 2. Obviously, we would need to look closer to subdivide and confirm that. Then here we would have our breakout from the base channel, which would indicate the wave 3 movement. And as it develops, we can then basically connect. So for example, let's say we only have this candle. We basically connect this, and with a parallel at 2.2, and we would wait for a breakout to the bottom to confirm, hey, we are now in wave 4. Now here we don't have a breakout, but we get a new all-time high, so we would change that to the next all-time high. Again, make sure that here we have our 0.2, and then here we have a breakout, which now indicates we're in fourth wave territory. Now, as mentioned, very often, but not always, that fourth wave will touch the base channel or the median of the base channel. When it doesn't touch it, I mean, it's like, yeah, that the second option is if we duplicate the channel. Yeah, so like obviously we don't triplicate, whatever the English word for that is, yeah. But if we duplicate that channel, then the other option would be we hit the top here or the median here. So basically we have 1, 2, 3, 4 potential targets for, although the top and median are the most likely one that are what Jeffrey Kennedy also talks about. But yeah, so even ignoring that, yeah, I said it doesn't always hit that base channel, but often here it didn't. That happened to be the drop during COVID, so where the markets crashed a little bit, yeah. And once we know we're in wave 4 territory, we can get a trend line and take the top point of 0.3, and we know we're in wave 4 territory once we have the breakout to the bottom here, and then we just mark it at whatever high we have. So, and that's a little bit tricky. So there we actually have to, actually it's not tricky. So we extend that line to the right. So now what we're doing is, we're waiting for a breakout to the top of this channel to indicate, not guarantee, that we're now in wave 5 territory, and we want to have a confirmed breakout, which we on the monthly chart don't get. Yeah, like, I mean, if we look closer, that's probably looks like a confirmed. Actually, let's look closer. Let's go to a weekly chart and zoom out a little bit, and we can actually see this is an unconfirmed breakout. So we see the breakout, and oh, it might be the 5th wave, and then usually we would see it going back, hit this channel or line, and then bounce off it, which is not the case here. So thankfully we waited for the confirmation. That didn't happen, because otherwise we would enter our long position here just to then experience this. Yeah, so we don't have that breakout. So technically we could now adjust and say, hey, this is our new wave 4. We wait for the breakout situation, and then we can see here that yeah, like months later, we actually, of course, we would miss all that upward movement because we didn't have the hit of the base channel, which would also serve us as a, okay, we can re-enter here, but we didn't have that. So we wait further, we miss all of this, and then we have the breakout, the correction back down, but it bounces from it. So we'll be able to enter here. And now we're going to zoom out again, or we would have been able to enter here. We're going to zoom out again, and then get another trend channel, because now we need to have our destination channel. So, and for that, we take our 0.4, which is this low point, our 0.2, and make a parallel through our 0.3. And then very often that 5th wave will either hit the median or the top of that channel. As you can see, it hits the top and glides along the top before it finishes, which would indicate that this here is 1, 2, 3, 4, and then 5. We would have to check. 5 is potentially here. What do we have as high point here? 289.23, 289. Yeah, so that's slightly higher. So that's 0.5. And then we have a corrective wave going down here with a steep decline initially, which is a zigzag pattern, very likely. So A, B, and again, I think we're not done here yet. because that doesn't look like it played out as an ABC pattern. I mean, theoretically, if we only look from here, we might be tempted to say 1, 2, and we go up here. But if we consider that very often we go into the territory of wave 3, we still have a 50% possible drop here that we're waiting for. And then it probably, or not probably, but yeah, in my opinion, might turn out to be like this, to then be 1, 2 of a bigger degree. Yeah. Now, if we use another tool real quick, so wave basis here, which you can also find linked in the description down below, and we open wrong square, SQ, cancel, square. Do we have it here? Stock, Square Inc. Okay, but I want to have it. Which exchange are we looking at here? NYSE. NYSEA, there we go. SQ, not showing. Okay, so is there another? There, NYSE, sorry, my mistake. Oh, it's Block Inc. Really? I thought, yeah, Block Inc. Okay, I thought it's called Square. Sorry, my mistake. So their product might be called Square. So if we look here, and the beauty of wave basis is, first of all, after you have your trial and you don't sign up, you can still use it, although with some limitations. Second of all, the beauty is, while Motive Wave, my favorite tool, has like things that tell you, hey, that's valid, invalid because you're violating the rules. It doesn't have price or predictions for the different patterns. Whereas Motive Wave, albeit not perfect, as you can see here, yeah, it has the prediction for where the next wave target will be. Now here it would get it wrong, of course, so it's not always right, as we can see here as well. It would also get it wrong and only expect an increase in here. And just in case you're wondering, here it would also, I mean, it gets it right to some extent that basically, yeah, in this area we have a lot of attempted turnarounds, but then we still have this crash. But then we can see in this case, it actually then would have gotten it right. Now, if you're wondering, well, it's easy to put boxes on the chart when the chart already exists. The box is not based on those candles. The box is based on where I put that wave 4 target. So depending on how high or low I have this wave 4 go, so if this candle here would go lower, then you see the target for wave 5 would also move. And yeah, and same for previous. So if I change wave 3, it also affects all future. So basically the previous candles that exist affect where the box is put for future candles. Yeah. Now, additionally, we can then also say, okay, if yeah, like so, this is then 0, 1, and we don't know where 2, 3, and 4 are. Yeah. So we're just gonna throw them somewhere right now, and the 0 needs to be adjusted, which then gives us a target for wave 2. Okay, which also completely is wrong. Yeah, we would have sold short. Or we would have bought here potentially, assuming that we'll go up from here, and would have gotten it really wrong here. So yeah, for this stock, yeah, it just shows that the forecasting from wave basis isn't always correct, but it's a nice tool to use to try to get like additional confirmation for whatever predictions you have, yeah, or make or whatever. But yeah, so let's get all of that from the chart real quick. So I said, theoretically, if we just go from a least recent low point, we could say, hey, well, that's like 0, 1, 2 here, and now we go. And that would tell us, okay, the 0, 2 target would be, or the 1, 2 target would be slightly wrong, but it would give us a profit target already of like 100% return for a wave 3, if that were the case. However, if we look at the whole thing like we did here, which again, now that everything is on the chart, it looks a little bit like a, I don't know, like art painting, I guess. But it also, yeah, like if you just tuned in and all of this confusing, just start over from the beginning. And then after a couple of minutes, we start labeling this. And I actually explain how we can use that mess of channels by adding them one by one to get your next targets without actually doing a lot of, yeah, magic things. I'm just going to take a sip real quick. So that's there. That's it. Thank you. And yeah, now let's adapt that here. So here we have basically the same label, and we say, okay, no, that's square blocking. Yes. So we say that's not wave 2 yet. We're actually saying, okay, we can get a horizontal line, and we just put it here and extend it. So that would be actually our wave 2 target somewhere. Might be drawn out a little. Again, don't take the dates for granted. So if I put it here, it doesn't mean that it will definitely be January 24 that we go down here. But I would assume, no, we don't need a trend line. What I wanted to was a corrective pattern. So I assume that we might look at something like this, yeah. Maybe the whole thing moved a little bit closer here so that those lines are parallel. Doesn't have to be, it's just like, I'm saying maybe, yeah. And in terms of retracements then, if we go here, and then beautifully, that would actually be the 61.8% retracement, which would perfectly fit as well. Yeah. So again, we would have the overall outlook makes it look like we have further corrections incoming. The corrective pattern here with a steep decline initially, small recovery, and not being far enough so far. I mean, theoretically, a recline to 38.2 or 50% would also be sufficient. But from the overall look, I would actually say that we will see a further downside here, hitting the 61.8 retracement, so 50% far or 50% downside before we turn around here and then actually start towards wave 3, which means the current year for Square or / Block Inc. Yeah, Block Inc. is the official company name, as I learned. Yeah, I really thought it's Square, but that's me. Yeah, bad year ahead, and then potentially a great next year, or not even a great next year, but then we would see the 1, 2, 3, 4, 5 slowly build out. So up that, so that then turns 1, 2, and then we would have wave 3, because that again would be a huge base channel then on a very high degree. Again, we're talking about years here. So if that turns out to be right, then this would become our base channel, and wave 3 would then have a breakout from here, which then means over the years, we would go from 33 or 32 point something actually into more than the whatever, like we would go into the 1300 range or more for our third wave here. Again, over the years. So that will not happen overnight, but it would actually take a decent amount of time. And that wave 3 would then subdivide again into 1, 2, 3, 4, 5, yeah, to eventually hit the target. Again, ignore the prices up here right now, so I'm just trying to illustrate where we would go. So yeah, there would be a decent downside. So, but however, I'm gonna check real quick on eToro. So if I want to short this, the problem with shorting is that theoretically, obviously, your risk is infinite. Yeah. So if the price would jump super high, now if I were to short this, then I would have my stop loss at this wave B, which would be 89.97. Yeah. So which means there would be a 46% risk. However, my take profit would potentially be at what did we say? 31.65 if we're cutting it close. So making that trade not worth it, because we would have 46% risk with 48% potential reward. However, our risk in theory could be higher because, again, short positions technically have infinite risk, because while the price can only go down to 0, it could not, so it can only go down to 0. It can go up infinitely. Yeah. And therefore we will not trade on that position. I will actually keep track of it, that we analyzed it, and that is my forecast, and we will revisit it, and we actually will keep the chart open. It will take probably, again, months till we see that play out. If we see it play out, the $30, $32 range in that area, maybe $35 already, will be the point where we would enter in that stock. Yeah, so where we would actually get started here. And with that, we actually managed. We only have 4 minutes over time. We analyzed the new stock. I'm going to share this video then later on my portfolio as well, so the people that follow me there can check it out as well. A pity that we didn't find an investment opportunity, but I feel like today we had a great run using multiple tools. So like in TradingView, using Kennedy channeling technique to label a new asset and determine where it's potentially going to go. And in Motive Wave as well, we have a new, I'm actually going to set a price alert for that. Yeah, so quickly, so set price alert, and we're going to do that at $35. So in case I mistakenly somehow remove that labeling, I get an alert and then forced to look at it again. Now, real quick, interesting enough, if we, where is it? That's the one. If we check on eToro and look at Block Inc., and we can actually see that the consensus right now would be a strong buy with a price target of 100. Yeah. So while we have basically, like one hold, or some people, let's say, hold with a target around 70. The highest estimate, let's scroll down. So we have we have a bunch of analysts that all disagree with my assessment and all say we are going up to 100 from here. Yeah. With some exceptions saying, okay, no, hold 70, 75, which still would be 20% upside from right now. And some even going as far and saying 170. Now, I don't disagree with the 170. I just disagree with it's happening before we go down further. It's going to be interesting to play out because this is, I don't very often check the analyst recommendations, yeah, but this is one of the cases where obviously my forecast, what I think is going to happen, is vastly different from every analyst that is listed on eToro. In case you're wondering, the analysts listed on eToro are actually from TipRanks. While there's no link in the description down below, you can just check tipranks.com. I might actually put a link in the future descriptions as well. I have to take a note so I don't forget that, because it's also a decent source to just get additional feedback. Doesn't mean that you have to follow that feedback and trade on it, but there you also have like track records for, let's take a look real quick, last thing we do in today's stream, so tipranks.com. You basically, if we go here to Square, Block Inc., yeah, then you can see breakdowns, the same one. eToro uses that as source, so it looks the same, but you can then also, especially on their paid plan, say you only want to see top analysis. So it does not, or if we go back, so here you would say top analysis, and it would not show you all their forecasts, but it would only consider the ones from the top 20% of analysts in terms of how often they get it right, and and how much return they usually achieve with their winning trades, which is a great additional tool. But again, like as you see in today's episode, at least I wouldn't rely on it alone, because like here I'm completely disagreeing. Might turn out that I'm wrong here and that it actually from here goes up and will hit the 170 or something. To be fair, if I look at this, there may be a scenario where wave B hasn't finished yet. Yeah, so like just not to save my ass, but it's possible that this is not yet wave B. We didn't bother to confirm the label on a lower degree, so that actually wave B would be taking us up here, and then wave C would still take us down. So yeah, I would honestly, I take it either way. I would prefer to be seeing it going down straight away, so we see it. Let's actually double check that. Then we would have that might actually align with what we looked up today. So yeah, I know I wanted to finish it already, but up, that goes there, up, there. Because we would see a 50 to 70% retracement. Okay, making that actually a possible scenario that we actually right now would have the upside to the, let's say 61.8 here, so somewhere in the 50 to 70% retracement area before we then see wave C develop and take us down to what we right now said might be, can you add that up? Yeah. So might be the $30 range, which would be even worse in terms, because it would feel like, yay, we're recovering, and then instead of a 50% drop, it would obviously be much more. So either way, right now, my long-term outlook for Block Inc. would be bullish based on 1, 2, and then we will see wave 3. However, I expect that before we see that bullish outlook realize, that we will go down further and hit the $30 mark. Yeah, again, so I'm not insisting on that we go down further straight. I agree there might be an option that we see the 150 first. Makes it sound a little bit harsher, as said. But yeah, so my forecast is we go towards 30, 35, and then from there we will see the turnaround to then over the years actually crushed whatever 600, what do we have here, $300 mark, and then 600, 900, and so on. But again, that's a year-long outlook. But yeah, we'll see how it plays out. Yeah, overall happy with the episode. I hope you were able to take something away from it. Don't forget, if you don't want to bother learning all of that stuff for managing your portfolio yourself, you can always just copy my portfolio, or just if you use the link down in the description below to join eToro, you don't have to copy my portfolio. You can also copy one of thousands of others popular investors that use different investment strategies that might be more suitable for you. But either way, and if you're copying me, you're also welcome to always join these streams to see what I'm doing and why I'm doing it. And yeah, with that, I'm going to end today's stream. As said, there's no stream tomorrow. Usually we don't have a stream on Fridays. So with that, we're going to see each other next week in the Daily Market Mastery series with episode number 16. There's going to be another stream on my Twitch channel in the evening where it's just like a little bit casual Xbox gaming and small talk. So if you're into that, feel free to join there. And other than that, don't forget that I also have a crypto-related channel that focuses on passive income with cryptocurrencies and things like that, that you can find linked at the bottom of the main YouTube channel page here, or you just search for Christian Rauchenwald on YouTube and you definitely will find it as well. That's it. Thank you all for tuning in. Have a great day and see you in another episode or another stream or in one of my videos. So till then, bye-bye.